If you did a Roth conversion in 2023, make sure your tax person fills out this form correctly. Otherwise, you could be like Dave, who paid too much in a tax penalty. With taxes scheduled in 2026 to go up, everyone's talking about Roth conversions at today's lower tax rates. You might have done a Roth conversion in 2023, and now you need to make sure you paid the right amount of taxes. But don't do what I see most people, including tax preparers, do, which is follow the standard method for calculating when you should have made those estimated tax payments for your Roth conversion. Instead, you and your tax preparer need to follow the annualized income installment method and tell the IRS exactly which quarter you did the Roth conversion in so they don't think you owed them taxes before they were actually due. Now here's Dave. Dave files a married filing joint tax return. He and his wife have $30,000 per year in pension and $30,000 per year in Social Security. Like most people I see, Dave has close to $0 in tax withholding on his Social Security and pension, and that usually works out for him. Dave did a Roth conversion at the end of last year of $60,000, knew he would owe some taxes, and sent in $10,000 to the IRS as an estimated tax payment. Now, here's the form that you need to fill out when you pay those estimated taxes, because the IRS wants to figure out, did you underpay your estimated taxes? And the standard method of filling that out is just to assume that your income was exactly equal each quarter of the year. And if your income was exactly equal each quarter of the year, then you should have been paying 1/4 of your taxes that are due throughout the year. So here's how the standard method might look, where every quarter you should have been paying those taxes over the year, and you only paid it in the fourth quarter because that's when you did the Roth conversion. You might think you're totally good to go, except they were expecting money in quarter one and quarter two and quarter three, and you didn't give it to them until quarter four. So even though you paid the right amount, by the end of the year, they were expecting it each of those 4 quarters, and it's only the fourth quarter where it came in, and there is a tax penalty, and no one wants to pay a tax penalty. Here's what Dave should have done. Here's what you ought to look at before you file your tax forms. Look at something called the annualized income installment method, where you are telling the IRS, I didn't earn exactly the same amount every quarter. Go in and figure out exactly how much you might have earned throughout each of these quarters. And recognize, if you're like a lot of people who put the big Roth conversion in quarter four, you put down the big income in quarter four. And now the IRS can do the calculations to say you didn't owe the big dollar amount until the end, and that's when you happen to pay the big dollar amount at the end. Now, I made assumptions here that it was $0 paid throughout until the fourth quarter, and you can see the tax penalty is several $100s lower than if you just do the standard way of filling out the form. It is worth it for you to at least check to see, should you be doing the annualized income installment method. When you have lumpy income throughout the year, put that onto your tax form to see if that helps you. And when you do those Roth conversions, putting on which quarter it actually happened just might help you out when you're filling out your taxes. Now that you're on the lookout to make sure your taxes are correct, you might want to check out that your retirement plan is correct. Check out my next video, Is Your Retirement Plan Flawed? I'll see you there.